I'm Teresa Matic with Resource Investing News. Here with me today is Stefan Ioannou, mining analyst at Haywood Securities. Stefan, thank you for joining me.
Thanks for having me.
So you've said that copper won't shift into deficit for a few more years. Have supply-side events such as problems at Olympic Dam changed that prediction?
I think one thing to keep in mind when you're looking at supply-demand issues is the magnitude of the market. The copper market right now is about 22 million tons a year, and the reality is the surplus that we hear a lot about in the news, the actual magnitude of it's somewhere between, say, 300,000 to 500,000 tons. So it's actually not that large a number relative to the actual overall global demand. And so really, the market is in surplus right now. It will probably take a few years on paper to get through that. But the reality is, a strike at a major mine on its own would be enough to take out a significant portion of that surplus. So, just keep in mind that it is a surplus, but it's relatively small compared to the overall picture. So we could see, again, a major strike, disruptions at mines, changes in politics could shift that into deficit very quickly.
Okay. And copper has been dragged down in the short term by reports of slowing economic growth in China. Mm-hmm. Is that something that long-term investors should be worried about?
Sure. China's always been a bit of a moving bubble, and we do look to China as sort of the driver of growth for the global market and copper and other commodities in general. Even most recently, just a few weeks ago, we saw the PMI numbers, the manufacturing numbers come out of China, and they're actually good. It was a 50.1 was the flash estimate, and anything over 50 is a sign of growth. Anything under 50 is a sign of retraction. And so we actually are getting positive indications out of China now that manufacturing is actually increasing in the right direction.
Okay, and speaking of increasing, it's been said that economic activity picks up in China following the new year. Is that something you're seeing?
Sure, that's always a seasonal consideration in China. Every year the New Year's celebrations there are a major consideration. Things do slow down significantly, and a lot of inventory buying is usually done right before, but when people come back to market after the holidays, there is usually a spike back up towards sort of more normal levels for the rest of the year.
Excellent. And where do you see the price of copper averaging for 2015?
Formally, we're taking a fairly conservative approach at Haywood right now. Our formal price for this year is $2.50. Again, China is something we need to keep an eye on. That said, looking further ahead, I think there's some very strong arguments that copper will increase over time. Our long-term price is $3.25 a pound, and I wouldn't be surprised to see even a $4 copper price at some point between now and say 2020.
Okay. And speaking of the current price environment, you've said that you favor good grade when looking at projects. Any companies with exploration, development stage assets that fit that criteria?
Sure. Grade is always king, and usually just inherently higher grade deposits are typically a bit smaller. They're not the giant, billion-ton copper porphyries that have low grade that we hear about down in South America. Those are very, those that can be company makers, and those are the types of projects that attract majors. The one catch with some of those very large low-grade deposits is that they have huge capital costs associated with them, on the order of billions of dollars. At the other end of the spectrum are high-grade deposits that are usually much more manageable for sort of the junior space in the resource sector. So grade is always king. It's going to keep your cash costs low, all else being the same. And, off the top of my head, one to consider may be Highland Copper up in the Upper Peninsula of Michigan right now. They're in the process of putting, call it 3+ projects together and designing a project that's centered around a centralized processing facility to take an historic mine, a new mine, and a couple other very high-grade deposits, put them all together and have some synergies there that make a lot of sense. And again, the grade there is quite good. It's not, your 0.2 copper. It's well over 1% copper on average.
Okay.
Yeah.
Thanks for joining me, Stefan.
Thank you.
I'm Teresa Matic with Resource Investing News.